Imagine it's 1914. The world is teetering on the edge of war. Up until this point, most of the Western world operated on the gold standard. Your paper money could be taken to the bank and exchanged for gold. It wasn't just paper, it was a promise. A dollar was worth something tangible because it was backed by something scarce. But when World War I broke out, something changed. Nations realized that they couldn't fund the global conflict with gold. There simply wasn't enough of it to pay for the soldiers, the weapons, and the endless supplies. So one by one, countries suspended the gold standard and printed money. They said it was temporary, just until the war was over, but it wasn't. That moment, that quiet decision to print more money than they had gold to back, changed the global economy forever. It was the beginning of what we now call fiat currency, money by decree. Money that only has value because governments say it does. A century later, after decades of inflation, recessions, and financial crises, another moment happened. In 2008, as the global financial system was collapsing, an anonymous figure calling himself Satoshi Nakamoto published a paper describing a new kind of money, one not controlled by governments or banks. It would be digital, scarce, transparent, and decentralized. He called it Bitcoin. Was this the world's chance to return to sound money, or just another kind of illusion? Today, we're diving into Bitcoin, fiat, and the future of money, what it is, why it exists, and what faithful stewardship looks like in a changing financial world. Welcome to Plan to Prosper, where we exist to honor God by equipping faithful servants to steward their finances wisely and build wealth that endures for generations. All right, guys, we are here for another episode of Plan to Prosper. Today, we're going to be talking about Bitcoin. We have our friend and colleague, Sam Stehr, on with us again.
Thanks.
Welcome,
again,
Sam.
Thanks again for having me.
Yeah.
Friend for now.
Friend for now.
We'll see you after.
Yeah. So there's a bit of an internal debate in our office with Bitcoin. Sam is a little bit more for it. Logan is very much against it, I would say.
He loves fiat money.
I would say, spoiler alert, you're going to hear some different opinions. Another spoiler alert, I'll admit you can be a Christian and have either opinion. And yeah, it's interesting that this kind of an investment can be so potentially controversial.
Yeah. Do you have any other thoughts before we jump into the meat of things? Anything else that you want to share that's...
I would say we have yet to do a podcast on an individual investment. So I'm just going to preface it all with, this is not an endorsement, or this is not a buy recommendation or a sell recommendation or anything. It's just information regarding Bitcoin.
This is true. Yeah. There's a lot of fascinating things that come into the conversation when we start talking about this, even things that I didn't realize until I started prepping for this episode. Like, I did not know. I knew that the gold standard was suspended at one point, but I didn't realize it was a result of World War I.
Mm-hmm. Yeah, I don't think I probably was supposed to learn that in college, but I don't remember it.
Continued on into World War II, like the two wars being back to back was, a huge blow to the gold standard, no doubt. Yep.
And in this book, we'll reference this a little bit, is the book, The Bitcoin Standard. He makes the argument, and this might be true, that to that point, wars tended to be, they wouldn't last super long, or they wouldn't expand into certainly global conflicts. This was the first time. This is, it's World War I. And the reason was because they just didn't have the money to do it. And so this was the first time that we expanded the money supply so that it could fund the conflict, or to a ridiculous degree, which led to these world conflicts. I'd be so curious if we had just maintained the gold standard. He makes the argument that the war wouldn't have lasted that long, and it certainly wouldn't have turned into a global conflict. I didn't know that. I don't know if that's true or not, but it's an interesting thing to think about.
Mm-hmm. Yeah, he talks about the Germans and then the other side. I think it was in World War I, how the English and the Germans on Christmas just stop fighting and go play football together, soccer, on Christmas Day, and there was a confusion. He points out on the front lines of why they were fighting this war, and didn't really have on the front lines didn't have a ton of beef besides that they were being told,
This is what you have to do.
This is what you have to do. So yeah,
and I've heard pastors share that story on Christmas as like a fun Christmas story that's like heartwarming, and it's like, look at the power of the Christmas story that it can bring people together. I've never thought of it as like, no, these guys really didn't hate each other. They were doing what they had to do for their country, but they didn't really even know what they were fighting for. They didn't see the other side legitimately as like, you are the most evil person in the world and I must destroy you. It was just, we're in this battle and I have to do it.
Yeah, I do wonder if, I guess recently maybe it's a little bit different, but I do wonder if in wars that's ever really the case. If like people are like, oh, I can't stand this country or whatever, where it's just like, oh, we got caught up in this global issue.
Yeah.
Yeah.
So that's a little bit, let's back up a little bit and let's talk about money itself and what money is for, what its function for. I think we all know what money is intrinsically, but do we ever think about kind of what, going back to the beginning, what is the function of money?
You want to go?
Yeah, I mean, there are a few things. Store value, a way to exchange things. I go to the store and I buy a coffee and I pay $3 or whatever coffee runs for these days.
$6 now.
Yeah.
Depends. Starbucks, yeah.
Yeah.
If you're lucky. Yeah, anything else?
Yeah. So store value and then being able to exchange, and those are the two that I would think of. Yeah.
And you think about, going back, I mean, money's been around for a long time, but like it used to be more of trading things. Like you collected pelts when you were, out on the wilderness, and then you would trade those for whatever, like food or corn or whatever you might be. So kind of evolving from more trading assets in that respect.
Yeah, I mean, bartering has always been, the way to exchange, and money brings us in between this bridge. And so bartering, I mean, I feel like what you just described is bartering, and
right.
And so there's always value to the things that we're trying to exchange. It's just when there's a system, a standardized system, that's where there's ease, and that's where there's a lot of fluid exchange that can go a lot faster.
Well, and even in the book, it got into some of the history of what has been used as money before, like the seashells. There was also that rock that they would have to like mine in Palau and bring to Micronesia or something. So yeah, fascinating different types of money in the past.
Yeah. Side note, I went to Pandemonium this weekend. Have you guys been there yet?
No.
Do you know what it is?
No.
It's this new bakery in Downingtown. Shout out Pandemonium. So they're only open like
Free ad.
3 days a week, Fridays, Saturdays, and Sundays from like 7 a.m. until whenever they sell out. So it's usually pretty quick, within like an hour and a half.
Oh, wow.
So I got there at like 6:30 and there was already a huge line out the door, hadn't even opened yet. And then by the time that they did open, there was like an even massive line behind me. So anyway, I go in, I get the things that I wanted, and I go to the cash register, and I'm like, man, I was telling it was the owner of the bakery that was manning the cash register. And I said, man, this is so cool. And they're like, well, you guys are doing such a great thing here. And he goes, oh, thanks, man. Yeah, it's been great. So feel free to come back and barter with us anytime you want, and we can figure it out. So I was like, I haven't thought about bartering in a while, but he opened the door for me to do it there.
There you go.
The pastries were delicious. So
let's go.
Go check it out sometime.
Yeah.
That is a recommendation.
Your kid will love it. Yeah.
Literally.
All right, so a little bit of the backdrop then, back to World War I. So what were we on as a country, and most countries at that point, from a money perspective?
Gold standard.
Right. So explain that a little bit. What does that mean to be on the gold standard?
So you could exchange your printed dollar or whatever currency, European countries weren't on the dollar, obviously. You could exchange that piece of paper for gold, or multiple pieces of paper.
So banks had physical gold in their vaults that if you had $1 in your hand or whatever printed money, that represented, I can go at any time exchange this for gold.
Right.
Yeah.
Yep.
And because
so it was always backed by that gold.
Right. So because gold is scarce, there's not an infinite amount of it in the world. That reduced Was inflation? I mean, I don't even know this. Like, was inflation a thing before this? Like, or was everything fairly steady at this point when you're on the gold standard?
I mean, the one fascinating story to me. It seems like inflation is always a thing. I can't remember what century it was, but the author talks about how in Rome they had a coin with gold in it that then they started making it with less gold, so it was that's relatively inflationary.
Mm-hmm. Yeah, I mean, if you keep it 1-to-1 from a technical standpoint, there shouldn't be inflation unless the value of, I mean, this isn't the definition of inflation, if the value of that thing goes up or down. So no, not technically. Yeah. There wouldn't be, because even what you're saying, like if they're, chipping gold off of a coin or they're changing the coin, then they're inherently changing the value of what you're exchanging it for.
Yeah.
And that's one of the arguments, what you had mentioned, the argument for like a gold over silver is gold is harder to mine. And so like as there's more demand for silver, miners can just increase the amount of production relatively easily compared to gold. So that's one of the arguments for gold.
Mm-hmm. Yeah, there's a manipulation factor with silver that there isn't. It's much more difficult to manipulate gold's exchange rate.
Okay.
Yeah.
And so with the onset of World War I, there was this gradual, I don't know how quick it did happen, but country by country, getting off the gold standard to fund the war efforts. Mm-hmm. Essentially, your government could just print more money,
mm-hmm.
which is obviously a highly inflationary thing.
Right.
Yeah. Depending on how you're doing it.
What do you mean?
Well, if one country is printing a lot less than another country, then the inflation is going to be much different.
Right. But when we were on the gold standard, each country was still basically all tracking together. The value of their dollar was consistent because it was all backed by the same asset, right?
Yeah.
And then when we switched off of this, then it was high, like he had charts of, like the U.S. dollar was pretty strong throughout it all, even though inflation was happening relative to other countries, it was still one of the better ones. Whereas it then just created these crazy exchange rates across, like depending on what country you were in and what they had.
Yeah. And that's where like a flaw of the gold standard is, how much you can exchange it for. So there would be incentive for a government to exchange it for a lesser amount, from your citizen in the sense of, or a higher amount of dollars, and then go to a different country and arbitrage it and, buy gold off of them for dollars for less. So there's still like, no matter what with humans, there's going to be either error or a desire for, trying to use money to get ahead. Mm-hmm. I feel like the flaw with the exchange would be the price, because it's still technically not like free market when you're going to if I'm going to Logan and exchanging $1 for gold, he makes the price. And, that's different than the government having a set price, which could be different from the market. So there still is like flaw. There's something that is still backed by, which is important.
Yeah. So we go off the gold standard, it theoretically temporarily in World War I, but in reality, that's not what happened. And
we're not on it now.
Yeah. Right. But there were like tiers to it. Like it wasn't. So he talks about like the Bretton Woods system after World War II, and then in 1971, officially Nixon ends gold convertibility, ushering in like pure fiat era. Mm-hmm. And so it's been that way ever since, which makes sense because we've all seen movies or your grandma talking about how much things cost in her day, and it's like 5 cents for lunch, and we're like out here paying like $30 for our lunches. Like it's like, a pretty drastic increase in the past 100 years of how much things cost. So we all understand this, and we can all see with our eyes that this is a real thing, that inflation has, because we just keep printing more money.
I think the mint in Philadelphia just stopped making pennies officially. I was reading on the Wall Street Journal. So,
because it costs more to make.
It costs 3.5 cents or 3.7 cents to make a penny.
That's crazy.
So they just officially stopped making pennies. So yeah, it's crazy how, a penny to someone in, 1950 or even later would be valuable compared to us. It's worth nothing.
Are we going to move to 5 cent increments in everything?
I know, it's a great question.
Yeah, I wonder how quickly it would take to do that, to kind of filter out of the pennies. I mean, I don't even pay in cash much anyway.
Sure.
There's a ton of pennies in circulation, so it's not like they're taking them out of circulation. It's just that they stopped making them. So yeah.
So you won't see any 2026 pennies.
Yeah.
I wonder how much money exists purely in pennies.
I know, that's a great
In
question.
physical pennies, I'd be curious to know.
Yeah.
If we were to suddenly like take those out and like it has no value.
We will not take them as exchange. That'd be crazy.
Yeah, that would be.
Poor Abe Lincoln.
Yeah, seriously.
Yeah. Yeah, he's still on one of them. He's on the $5 bill, right?
Mm-hmm. Yeah.
Probably. I rarely use money anymore. I'm like embarrassed to pause and think, oh, who are on the bills?
I know.
Who's on the 20?
Jefferson?
No.
I don't even know.
Andrew Jackson.
Oh.
Who's on the 100?
Ben.
Yeah, that one's easy.
The 50.
There's a $50 bill. I don't know if I've ever seen one.
Isn't that Ulysses S.
Grant,
Grant?
I think you're right.
Yeah. We were me and my wife were just in Boston, and in the North End, there's a bunch of Italian places, and a bunch of them still are cash only.
Nice.
So there's pockets of our country, even in the, I feel like one of the most quote unquote modernized cities, MIT down the road, and they're still taking cash in North End. I there's part of me that respects it, but yeah.
You're making me doubt myself now. There's a 50, right?
Yeah.
I think
Yeah. All right. It's like, I'm not crazy.
I just don't know
No,
that I've
there is.
ever had one for any reason. Like, because like when you go to the ATM and you take it out in $20 increments, like you can't take out a $50 bill. So
Right.
You
There are.
have to go to the bank, I guess, to get that. I
saw
don't
one
even know
recently.
how you would end up with one.
Yeah.
All right. So that's a little bit of the history of how we got off the gold standard.
And can I just add real
Please.
quick? So an important part of this is that after World War II, what was the meeting? Bretton Woods. Yeah. Was that where all the countries came together and agreed to give the U.S. all the gold?
I think so.
Yeah. So like that's an interesting part of this, is that like the U.S. dollar is still trusted so much because of Bretton Woods. So despite everyone getting off the gold standard, we were given all the gold. and I don't know how that works now. Like, I don't know if I mean, at one point we stopped other governments coming to us and exchanging their money for gold. But, all that to say, it is interesting how the U.S. was, for probably many reasons that I don't even know, was given this golden ticket literally to be the trusted source of exchange through the dollar. And that still holds true today. I wonder if the U.S. would have as much dominance in the financial systems if that didn't happen then. If we were still in the gold standard, we might not be as dominant of a financial, powerhouse as we are. But it's an interesting, thought that benefit us a lot. But it, maybe not as maybe as citizens, but especially from a power standpoint, from a financial standpoint.
So how would you define sound money? Yeah,
I think one, one that can be exchanged for the same amount today as it could be for, next year or the next, century. I would say like equal value.
So emphasizing the store value, kind of.
Yeah, I would argue that. Yeah, that would be a part of the definition. Yeah.
Do you think fiat currency has passed or failed that? If that's the definition of sound money, does fiat pass that test?
It's interesting. My head, since reading most of this book, has been spinning. I've been trying to figure out what I think. And I can't decide because ultimately I kind of think we are at the mercy of government in any situation, like with even the rocks that they were getting from Palau to Micronesia. At one point, the leader or whatever of the country said, well, we're not going to take these rocks from foreigners. So it was for a while a store of value, a medium of exchange. And then even in that case, the government came out and said, nope, not anymore. So yeah, I don't know. It's an interesting philosophical question. I've been struggling with the store of value part because I don't know what I can't really think of something that would be a legitimate store of value that you can exchange. I don't know. I've been having interesting thoughts.
Well, let's think about it from the other perspective then. Like, the point of this isn't just to say like fiat money is intrinsically and in every single way the worst. Like it's terrible, right? So like
it's not.
What did it solve that hard money just couldn't? Like there is a reason we did it. So what did fiat solve?
It's easier to exchange.
Yeah.
Yeah. It's easier to exchange. It's easier to take in and out of circulation. And I think that's like probably the biggest reason why our government did what they did, like we were saying. They started funding the wars, which, would, be a side topic to see if that was right or wrong. But nonetheless, that's what happened. And so from then on, they, have the right as the one who, administers the dollar to take it out of circulation and put more into circulation. So from a speed standpoint, you can definitely, do that very quickly.
Yeah. All right. So let's get into Bitcoin then specifically. 2008. I'm curious, do either of you know, because I mentioned in the cold opening that obviously we know that the financial crisis happened in 2008, and this was the same time that Bitcoin was introduced.
Right.
Did he introduce it as a direct result of seeing the financial crisis? I mean, we might not even know because we don't even know a ton about this guy that started this, but or was it just happenstance that he had maybe been thinking about this for a while and just so happened that the financial markets collapsed and he develops Bitcoin at the same time?
I don't know the answer to that question.
Yeah, he or they, in the sense of, I believe that it was a group of people who wrote the white paper, not just
calling them a they, them.
I was going to say that's why I'm being specific on why I use the word they, is that I believe this was a group of people, not just one human. So they talk about it in the white paper, but I forget exactly the timing. But I do know that they recognized the lack of trust that was starting to be developed, especially, like if you look at, you could look at the history of the 80s and see what high inflation did, and then or I guess it would be high inflation of the 70s and then the interest rate of the 80s. I forget exactly the timeline. But nonetheless, there's not just 08, 09 that you can look at of like, wow, this is not trustworthy because of the manipulation that can happen. I think there was past history. They talk about it in the white paper. I haven't read it in like 3 years, so I forget. But
Gotcha.
There was appropriate timing, either purposely or not.
Yeah, right.
At that point.
I think that makes only one of us that have read the white paper then.
Yeah.
Yeah, that's true.
It's not that long, so it's worth reading. I just haven't read in a while.
Yeah. What explain just in real briefly what the 2008 crisis, what led to it, what happened?
Yeah, it was a lot of bad debt being passed off, packaged up and passed off from bank to bank, and then finally, it just couldn't be paid, and banks started going under because they weren't making money on the investments, and just the whole financial sector kind of just plummeted.
Yeah.
Because all these investments were not what people thought they were.
Yeah. A lot of it was around like mortgage-backed securities with giving mortgages to people that probably couldn't pay them. Like there was just a lot of bad value in these mortgages that a lot of house for people that maybe didn't have the money to pay for them. So
way too easy to get a mortgage.
Yeah.
And so what banks do is then they take those and they package them all up into one investment.
Right.
But when you package up a bunch of bad debt into one investment, it doesn't make the investment any better.
Exactly. So what are some of the key aspects of Bitcoin that make it what it is? What are some things that are unique about it that kind of fly in the face of what we understand in fiat currency?
Yeah, I mean, first off, it's decentralized. So the function of Bitcoin, essentially it can be trusted, or the trust is validated by a lot of different computers. And so this trust cannot be manipulated unless you owned, more than half of it. So when a lot of different people from a lot of different backgrounds in a lot of different countries run the program, and we don't even know all the, everyone. It's like it cannot be fully condensed into understanding exactly who runs it and exactly who owns it. And so it doesn't have like the US dollar is, it is run by the US government, and it is therefore centralized by the US government.
Right.
That's not true of Bitcoin. I would say that's probably the most important aspect, is it's decentralized. I would say the other, there are a bunch, but the other big one would be it is finite. So there's 21 million, 20 million essentially that's already been mined of Bitcoin. And so there's a finite amount. And that is also not true of any fiat money out there. The governments that run them could print more or take out more.
So there's only ever going to be 21 million Bitcoin.
Correct.
In existence. There will never be any more than that.
Yeah, exactly.
And like you said, almost or just about 20 million has been mined already.
So there's only I think less at this point, less than 1 million that's going to be mined, and it won't be fully until 2040 or 2050. 2140, 2150. So not for another 120 years or something.
Doesn't it get harder and harder to mine?
Yeah, and then it gets more difficult. It takes more energy. It takes more computing power, and it takes and the reward is less. So
he designed it so that a block would be mined every 10 minutes or so, and it started with
which varies,
50 coins in each block. And then it started to go down from there. And I think it halves every 4 years.
Yeah, I think the halving varies, but I think it's about every 4 years. Yeah. Yep.
It sounds like, this has been in existence for whatever, 18, almost 20 years, 18 years, whatever that is, for 2008 to now.
Yep.
I'm not good at math.
Yeah.
You know what I mean? And we've already mined 95% of it. That makes it sound like to me that any day now we're going to just finish this up. But that's actually not the case. A lot starts early, and then it's like really slowing down. So
Yeah.
it is hard to believe that it's going to take another 100 years, 100 plus
yeah.
years to mine the final 5%, but that's how it was designed, I guess.
Exactly what's going to happen. Yeah. And it's worth it for these miners to continue on to mine the coin. Yeah.
So can anybody hop on their computer and start mining Bitcoin?
I've never tried. I understand that you can. Again, I think it would take a lot of computing power, and I don't think it's worth it really anymore for that. So like, I remember I was just reading how, Satoshi or that group, they originally mined like 1 million Bitcoin very quickly. I think it was within days or something of when it was first created. So at the start, again, it's just this like curve that decreases very quickly. And so yes, but I don't think it's worth it anymore for us. It would be worth it for us to create a wallet and then have that wallet be on your computer rather than using a third-party exchange, but not mining.
So when you go on an exchange to buy Bitcoin, you're buying Bitcoin that's already been mined. You're not going through that process and actually mining it.
No,
yourself.
right, correct.
It's already in circulation.
Yeah.
That's right.
You're buying it from a person or an institution or
Right. Yeah.
It makes it sound like when you hear the stat that like 95% has already been mined and you go, wow, I missed it. Like I'm not going to, if I didn't get in on that, then I'm not going to be able to get, but that's not true. It's just like gold. The gold's already been mined. It exists in a bank. You can still go buy it. Like,
Yeah. It's just like primary and secondary, you go and buy Apple stock. You're not buying it from Apple. You're buying it from the person who owned it, before secondary issuing or exchange. Right. Yeah.
So the mining process happens through what's known as the blockchain. And it's this ledger essentially that requires proof and it's verified by other miners. So in that sense, it's a highly, it's not regulated because it is decentralized. It's not regulated by the government or anything, but it's not as if you can just claim to have mined it. Like you have to prove that you did it.
Right.
And it's verified by everybody else that's doing the same thing.
Yep. And it's important because it's verified by everyone else because they want it to be verified, because if it wasn't verified by everyone else, then their own Bitcoin would then be totally in control of, the unverifiable block that just, got mined or node that just controlled that amount. So there's incentive for the miners and for the verification process because it holds up the whole system to keep the value of Bitcoin for everyone else. So
right.
there's value in verification because then your Bitcoin is still worth what it is. It would just go to zero if people stop trusting it, just like with anything.
Yeah. We were talking a little bit beforehand. I'd heard this analogy to try to explain the blockchain a little bit more simplistically. I had heard it explained on a podcast years ago that it's like, imagine you're in a village 400 years ago and they're a brand new village trying to just create life for their people and trying to come up with a monetary system, and they figure out the best way to do it is in the center of town. They have a physical ledger that you have to, anytime you make any kind of exchange with anybody, anytime you buy anything, you're buying and selling, you have to go and physically write it down in the ledger so that anybody and everybody can verify that that actually happened. So if you buy from somebody, you have to put it in the ledger, and the person that you bought it from can go and make sure, that is in fact what happened. This is kind of a digital way to do that. So it feels for people like me that like can't even fathom what's happening in this blockchain. It's a little bit of an easier way for me to understand it, except for the fact that I don't know how to verify other people. Like it still feels foreign to me, like that there's just these anonymous entities that are mining and verifying and proving their work and all these things. still is a little bit beyond my scope of understanding, but
Yeah.
Me too.
Yeah.
it's fascinating.
It is. I understand it as a bunch of people who are running this open source code, and that's the extent of. So it's a lot of different people on computers that are running this code. So, besides for that, I don't really know exactly either.
All right. So Sam, what caught your attention first as an investor? What was it about Bitcoin that caught your attention?
Yeah. Well, I first saw it when I was in this class in community college. There's this guy who had his computer open, was clearly not listening to the professor. I don't think it was even a finance class. I think it was an accounting class. And he had his computer open, and he had a chart of Bitcoin. At that point, I don't think I knew exactly what it was. So I think I was like peering in, leaning over my desk, looking at like, what is this exchange that's like, it was just, it was showing, the volume and the price. And I was fascinated. And so I looked it up later, that day. And I was telling Dalton earlier, I found it, but I found it on a Chinese exchange. And again, I knew nothing. So I found this, I tried to buy it, and it didn't allow me to buy it because, again, I was on a Chinese exchange. So then I just didn't buy any, and I did some more research in the years after. But that's how I first found it, was someone's computer at community college.
It's so fascinating.
Yeah.
When did you first hear about it? Do you remember?
Not really. I think I was in college when I first heard about it. I think people were starting to accept Bitcoin for items. Like, I think there was a pizza shop in Boston that was, we'll take Bitcoin for pizza. One of my in-laws graduated and got Bitcoin from her college. Back when it wasn't worth a ton.
Right.
So I was aware of it. I don't remember when I actually back in like 2017, 2018, I remember there was a Netflix documentary and I watched that. I'd say that's when I started to gain more understanding of what it actually was.
Okay. All right. So here we have Sam. You are more in favor of Bitcoin in general. Logan, you're more against it. So let's get into that a little bit.
Have it out.
Let's start with Sam. What is the appeal of Bitcoin then? We've explained what it is, and we've hit on it a little bit, but given the historical context of the gold standard and everything else that we've talked about, what is it about Bitcoin then that is appealing to you?
Yeah. I mean, it goes back to like how it functions. Again, I think store value, it's decentralized and it's digital. People call it digital gold. And generally I would agree with that because it's rare. People find it valuable. So the only reason that it's trustworthy, or not the only reason, but one of the reasons it's trustworthy is because other people find it valuable. That's the same with gold. That's the same with really anything. When it comes to store of value is, a set amount of people also believe the same thing. And so I think the digital aspect is the aspect that's, I think, one of the most interesting because I think in a lot of ways you could probably make an argument that gold is quote unquote decentralized. And so, gold is clearly a store of value. I mean, we've seen that in these last 2 years. Let's say. I mean, it went from like 2,000 to what is it at, like 4,200 now or something. So it's seen an insane, over 100% growth. Store value clearly. So the digital nature of being able to exchange with someone, from around the world, from across the country, and being able to do it without an intermediary is, I think, pretty invaluable.
Do you see a world where the government is able to step in and seize more control of it? Is that a potential concern?
Yeah, I mean, that's true of anything, I would believe. But that's what we saw in China. Like back, I think it was before COVID, but I could be wrong. I think it was before COVID that China stepped in and banned mining and banned their citizens from holding Bitcoin, from exchanging Bitcoin. So it's very much possible, and it's it's lucrative if you care about the control of money, as most governments do. Yeah.
Yeah. There's the principle in Proverbs of honest weights and measures. I think you could make the argument that Bitcoin allows for that a little bit more in the provability, in the way that has to be verified, and in its decentralization, in its limited supply, that the nature of it requires that a little bit more. I think it's harder to be deceptive with it, and harder to be manipulated to certainly the way the fiat money is.
Yeah.
Would you agree?
No.
Okay. All right. Well, we'll get into your case against it in a second. Anything else that you feel is important to mention in the case for Bitcoin as a part of this conversation?
Yeah, I mean, I think like big picture, I think it is an asset that can be used if you truly believe in the longevity of technology. I think there's not many things that are out there right now that, if you really believe in continued use of technology, and what I mean by technology is computers, smartphones, the use of how now those computers and smartphones and other things are a bridge to AI, AI to us. So I think if you're long technology, then it makes sense to be long Bitcoin, because they go hand in hand. I think if you're not long technology, if you believe that, he talks about this in the book, if half the world just nuked each other, Bitcoin would still hold value. I don't know if I really agree with that. I mean, I think if things got primitive again, I don't know if I would trust Bitcoin. I don't think I would care. So I think...
Yeah, I completely disagree with that.
I think that if you're long a stable world that uses technology primarily, then I think that's probably the biggest argument for continuing to use it.
Okay, Logan. Sam use the phrase that Bitcoin is like digital gold. Do you agree?
Absolutely not. I think that I find it hard to call something a store of value when it's in its short history. There have been 3 separate times of about a 70% drawdown. If you get caught in that in the wrong time, your store value's almost gone. I also think that it doesn't even take people selling it for it to lose value. It's just going to be people not wanting to buy it. And I think right now we've been in kind of a privileged time of just a lot of growth, and so there's been a lot of speculative investing because people have cash on hand that they can invest. They don't need to use it for consumption. But once people need, if we get into a time of more need for the cash on hand to be used for consumption, people are going to sell things that they don't perceive has value. And I think that when you look at things like, and so actually the other issue is the medium of exchange aspect. I think it's just as easy actually, for me, it's more easy because I haven't really tried to exchange Bitcoin, but it's super easy for me to get on my get on my Venmo and Venmo my mom $30 or whatever. So in my head, it's even easier for me to the medium of exchange using money, using dollars, than it would be Bitcoin. Yeah, I mean, those would be my two bigger issues with it.
Okay. And then there's, I've heard you talk about like just the lack of intrinsic value. Like when we do a traditional investing in stocks and companies that are producing products, producing valuable things towards society that you are investing in, and their stock can go up or down. And then, or real estate, there's physical things that are taking place that.
So yeah, the arguments I just made were against it being essentially money. The arguments against it as a traditional investment is, I think there's no real way to value it. It's a very speculative investment. If people think it's going to trend up, they buy. If not, they sell. But there's no way to, look at an earnings call or look at the dependability of a dividend and decide. I think that it's at a nice value right now, so that's why I'm going to buy.
Yeah. I'll throw this out to each of you to answer. What do you think is more likely in our lifetimes? $1 million Bitcoin, because right now it's worth, let's just say $100,000.
Yeah, 100. Yeah.
Or a $0 Bitcoin. That the value of a single Bitcoin owning that goes up to $1 million or goes down to zero. What do you think is more likely?
I think million. Yeah.
I think zero.
All right. Yeah. I'm not surprised by those answers.
Yeah.
And actually, one other issue that I have, this isn't as much of it's more of an issue with digital currency, is that there are so many of them now. Mm-hmm. So the scarcity of Bitcoin, I think, loses some of that benefit when you've got all these other coins now.
Yeah.
I was talking to somebody who's not heavily invested, but has a decent amount of Bitcoin, who was talking about this thing called, I think, Zcash, that a lot of people are seeing, and some people are considering it better than Bitcoin now. So with all these alternatives, I think it loses a lot of value.
Yeah.
Yeah. I mean, I think first off, you said you disagree with digital gold, but gold is just as, quote unquote, held up by the value of what other people, bring it to.
Gold has a lot more utility, though. So gold is used in like the chips on your phone. There's some gold use in like dentistry. So gold is much more useful. You're not going to. I can buy a watch made out of gold. I can't buy a watch made out of Bitcoin.
Sure. Yeah. Like jewelry, of course. There's the physical nature of gold, yes, but it never claims to be physical. That's why it's called digital gold, digital gold. But just because,
right? But that's part of the value of it, is that like it's used in a phone because it can conduct electricity, like a chip. So there's just that provides more value.
Yeah, I mean, there's physical value in mining, in the sense of like energy companies use Bitcoin miners to take on excess energy all the time and stabilize grids. I think the energy argument is muddled, because if you shut down all of Bitcoin, then it just wouldn't use as much energy. But I do believe that if we're going to use it, we're going to value it, then there are a lot of energy use cases, including grid stabilization, that can be really helpful to energy companies, going forward. I mean, you're not going to be able to stabilize data centers. Like, they're just going to be using the energy, but you can with Bitcoin, because you can push off excess energy to miners, and then redistribute when the demand raises again. So there are valuable aspects in the physical world. But I agree, you can't just take Bitcoin and put it onto your wrist like you can gold.
I think that leads to another question that I have is that Bitcoin or blockchain analysts estimate that approximately 20% of mined Bitcoin is lost forever. That it's either in, like it will never.
Those people that can't remember their passwords or whatever.
Right. And so, like, to me, that sounds concerning. Well, certainly if I was the one that owned it and couldn't figure out how to get it, that would be frustrating. But perhaps it speaks to it just makes it even more scarce. But when I compare it, if we're going to compare it specifically to gold, that I can't see that happening with gold. If you were to lose a gold bar or a gold coin falls out of your pocket, well, somebody else could go pick it up, and find it. Whereas if you can't get into your own password in your cold wallet or whatever, nobody else will either. So
there's definitely a security aspect to Bitcoin that is, easier or more secure.
And so my question is, if it's 20% now, will that only increase as the years go on, that more people are losing their Bitcoin because of X, Y, and Z reasons?
Yeah. And that number is speculation.
Sure.
But there is years of history to look at, like, these wallets that haven't been touched. They could be touched and, they could come back in circulation. I have a question for Logan.
Oh boy.
Please.
So what do you think about, I was just looking it up to confirm the number. Our government holds 198,000 Bitcoin. Why would you trust the government in fiat dollar and not trust Bitcoin when our government owns $20 billion worth of Bitcoin? Or I'm not trying to pigeonhole you. Did you know that? And, like, is there any value to Bitcoin if our government owns it?
I didn't know that. I'm a little confused about why that would make it more valuable.
Well, I guess I'm trying to get at the trust side. Like, if you don't trust the dollar, then that's one thing. But we do trust the dollar through I'm paid by Stonecrop in dollars. We pay our mortgages in dollars, or rent, whatever it is. We do everything with dollars. So there is the trust of actually using it, even if you don't want to. You trust it by using it.
Mm-hmm.
So if you do that much, like, I don't know, if you have any thoughts about, like, the U.S. government owning Bitcoin.
I don't really have any. I mean, it might make. I guess I don't know. I don't know why they would. I mean, I own whatever 15 minus 10 with growth is in Bitcoin from the $15 that Coinbase gave away during the Super Bowl that one year.
Mm-hmm.
So I own a little bit and I just kind of watch it. I mean, I think I would say I don't see that providing Bitcoin with value.
Okay.
Do either of you know how it works for businesses that do accept Bitcoin? Because, like, the dollar just inflates fairly steadily or whatever, and so businesses may change their prices because of that on an annual basis, let's say. But, like, Bitcoin changes its value by the minute. Like, you can just watch the exchange. Yeah, like you'll just see the value change drastically. So, like, just use Tesla as an example. I'm pretty sure they accept Bitcoin, or they certainly did at one point. If I bought, let's just say, one of their cars cost $1 Bitcoin when they did it 4 years ago or whatever, and Bitcoin was valued at $30,000 US dollars. But now Bitcoin's worth $100,000. So one Bitcoin is a lot more valuable relative to the dollar today than it was 4 years ago. So how do they do that? Like, how do they price in Bitcoin when the numbers change so drastically? And can you strike a deal? Can you get a better deal by doing it that way? Or do you end up losing a lot of money that way? Or would you be better off selling your Bitcoin and then just buying it in cash? Like that's what I don't understand is how we could move to Bitcoin being more regularly used and exchanged the way that we do with money. I just don't know how that works. Do either of you know?
Yeah, I mean, I don't think we would ever, like, when it comes to the exchange side, like I was highlighting the store value earlier, the exchange side, there are time downsides. And what I mean is that it takes 5 to 15 minutes for Bitcoin to go from my wallet to your wallet. So there is a downside of using that. It also is more expensive than most ways of exchange, in the sense of, if I'm using a certain amount of Bitcoin, the fee to exchange that or to send that is pretty expensive because of the verification process. So I would say, it was created to replace the dollar. I don't think that is the number one use case of Bitcoin. I don't think that will ever happen on, I would say, day-to-day purchases. I think people like big, larger purchases like a car or like a house. I think people exchange Bitcoin for homes, and that's happened before. So I think bigger purchases, I could see, that time frame. It's just like a bank wire, it takes 4 hours for my $100,000 to go from my bank to your bank. The important part is that we're not using an intermediary to exchange that money. We can do it without regulation, and I think that can be a good thing. But I don't think there's a lot of use case, honestly, with Bitcoin when it comes to the daily exchange of value. It just takes too much time and it takes too much energy. There are digital ways, like you were saying, alts. There's Ethereum that can do that a lot easier, and you can put your Bitcoin onto the Ethereum blockchain very easily. But again, that's more complicated, and I don't think, while Bitcoin was created for that purpose, I don't think it meets that purpose. That's not why it's at $102,000. It's other, including store value reasons, and
tulips from Holland reasons.
I don't know what you're referencing.
That was a big bubble back in the 1500s, where tulip bulbs just skyrocketed in price, and then one day people decided, these aren't actually worth much, and everybody's tulip bulb value plummeted.
Wow.
Nobody was buying.
Wow.
Yeah.
I've not heard of that. All right, Logan, is there a place in any respect for Bitcoin in your portfolio or in anybody's portfolio? Again, not advice, but just
not advice. I think the best reason for Bitcoin in a portfolio is for the FOMO client. If you are intrigued by it and it keeps going up and you don't want to miss out if it keeps going up, then sure. Our recommendation is typically no more than 5 to 10%. This isn't a recommendation for anybody in particular. That's just typically our rule of thumb for any investment, just so that you're not too concentrated. My mind could change one day, but at this point, I'm not holding more than the $30 or whatever I have in Bitcoin. I'm not gonna. I don't, because most of my education is in how to value things, and there's no way to value it.
Do either you know, do 401k providers, do any of them offer Bitcoin as an option?
I would guess there are some, especially because of the because they're in ETFs now.
Yeah.
So I haven't seen it, but I would guess with that type of investment vehicle now that 401ks are able to do it.
Yeah.
There's probably, if not direct exposure through the ETFs, there's probably like commodity mutual funds that have that plus gold or what, whatever. I imagine, because from a regulation standpoint, at this point, Bitcoin is recognized as a commodity, and so it's within that realm.
Yeah.
One of the other reasons I don't really love it in a at least in my portfolio is it's kind of turned into that risk on asset, and I would just prefer to own risk on assets that I perceive as having value with either tangible assets or or services that provide value to people, and so if you have the stock, you're actually benefiting from the business.
Yeah. Mm-hmm. Well, we are out of time. Thank you, Sam, for joining us today. We may have to continue this conversation another time.
I know.
'Cause we didn't quite get to exactly everything.
Might have to have a part 2.
There's a lot to this, but we appreciate everybody tuning in. Any final thoughts? Each, you have like 30 seconds. So anything else that either of you want to say before we sign off today?
I just think eventually we'll have to have a solution to the inflation aspect of our dollar, and it either means having incredibly high interest rates for a long period of time, or something else. And I don't see the U.S. government ever, going back to super high interest rates. I just it's too anti, the party that's in power, because it hurts. And so, there's probably going to be something else. That would be my final thought.
Logan?
I don't think so. I think I'm good.
Okay. Well, thank you for tuning in. Tune in again next week, and God bless.
God bless.
Investment advisory services offered through Stonecrop Wealth Advisors, LLC, a registered investment advisor with the U.S. Securities and Exchange Commission. This material is intended for informational purposes only.